Good morning and welcome back to Morning Markets from True Potential. Paul Durhams, Investment Director. Over recent weeks and months, the narrative has been building around slower economic growth. Consumers have been spending less and corporates have been announcing softening in demand, higher stock levels that they're having to shift at discounted prices. We've heard from various central banks, Europe, US and the UK, about the needing to raise interest rates more aggressively in the future in order to ensure that that inflation does come down to the 2% target. We can build on this narrative with the data that we had out on Friday from the US. So we had the ISM manufacturing survey data. This is business survey data, highly followed by investors because it gives you a really good up-to-date information about the broader economy, and you can dig into the different components to give you a real granular information. What the reading showed was it was disappointing. Looking at the new orders component, that was expansion last month. It's now contracting, showing that demand is falling. The production levels from the manufacturers is holding up well though, despite new orders falling, but we do expect it to fall going forward given that the backlogs component is declining. The employment picture, very important. The US Central Bank, the Federal Reserve, has talked about the need for demand to come down, perhaps at the expense of employment, in order to ensure that inflation does come down to that 2% target. What we saw on the survey data that the employment picture for manufacturers is declining, and that's really showing that the confidence from corporates is falling. On the positive side though, looking at the inflationary components, the prices paid component fell for the third consecutive month. Also, in terms of bottlenecks, they are also reporting improvements. So that's really a good part to focus on. Looking ahead, it'll be an important week for US economic data. On Wednesday, we'll get the job vacancies number, just short of 12 million at the moment. So that's 2 job vacancies for every unemployed person, which is a staggering number. On Friday, we'll get the unemployment rate, we'll get the number of workers that have been added or taken away from the US labour market, and we'll also get wage growth. Elsewhere, we'll get the Fed minutes on Wednesday. We'll also get an interest rate decision from the Australian Central Bank, and we'll get survey data on the services side from China and the rest of Europe. In terms of equities markets on Friday, we saw positive returns from the US over 1%, which is good to see, and that's probably due to some of the quarter end rebalancing. For UK and Europe, equity returns were broadly flat, but it was global government bonds where we saw strong returns. Investors preferring safe haven assets given the declining economic growth backdrop, and that really helped deliver positive returns and help those that have a multi-asset and well-diversified portfolio. That's everything from me today. Thank you for listening, and we'll see you tomorrow.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.